And we know that central banks have been binging like crazy on gold. Why? Because you just listened to the whole group over at the FDIC. You think central bankers don't know that better than you and me? Oh, yes, they do. And they also have an indication of just how close we are. And while everybody makes this assumption that they want this thing to keep going forever, I do not make that assumption, because there's virtually no purchasing power left in the currency, and they're anchored somewhere near zero. They're attempting to do a liftoff in interest rates, but that's pushing us into much more than a global recession. Although, if you listen, you're going to hear, oh, this is just going to be a mild recession. No, this is the end of this currency's life cycle. It's the end. It's over. It's over. There's no purchasing power left. They have to attack principal. That is, by the way, what negative rates are. But this is not impacted by it. And who knows more about money than central bankers? And who knows more about what they're doing than central bankers? But also the 1%, right? Look at that, these coins. Now, this is not an ultra rarity. This is a lot more common than that, which is all we need. I just want to be in this category. You don't need to spend $8 million on a coin, but I want to be in this category, because as we're seeing in places like Ghana and India, etc., that gold can easily be, well, not easily, but gold can be confiscated. They don't want you to hold your wealth. But are they going to swap an $8 million coin for $42.22 or even $50, which is the face value of the new 1 ounce gold eagles? No. So I want to be in that category, so it doesn't matter. What if I'm right and they confiscate? What if I'm wrong and they don't confiscate? Doesn't matter. 100 bazillion %, this is the end of this currency's life cycle, and nobody seems to be talking about it but me. I lived through it. I lived through it in 71. I know what that looks like. I want to live through it this time with my wealth protected, because who knows more about protecting and accumulating wealth than the 1%? I mean, seriously, do you really think that it's just a coincidence that global central banks and the 1% are accumulating gold as fast as they can at the same time? I don't think it's a coincidence. And I think this is what you should do too. It's what I'm doing. In the beginning, we had gold and silver money. You didn't need any guarantees because these were the guarantees. Then they transitioned us to this, this is a gold certificate, a $10 gold certificate. So you'd walk in the bank with this and you could walk out like that with that. And so that helped you feel like, okay, well, these had some value until they don't. But what's coming up is about to devastate most people, and the foundation is laid. What he was really talking about is after the confiscation of the gold in 33, those are the good assets that he's referring to. And he's also referring to the revaluation when he was talking about them being able to issue this money in large volumes. So he wanted to prevent the run to continue, much as we saw back in March of 2020, when we had all these central bankers coming out and saying, you don't have to worry about your cash in the bank or your money in the bank, because we can just create as much as we want to. So don't worry about it. It's the same kind of rule book that they used to use. And by the way, I'm going to show you this. This is the $10 gold certificate. And you could walk into the bank with this and walk out of the bank with this $10 gold coin. Well, I want you to take a look at the new $10 bills after that. They look very, very similar. So that's the way they make these transitions. They'll change the laws to instill that confidence, and they'll try and keep things looking as close to normal as possible so that you don't realize that anything has changed when in reality, everything had changed. The other thing that they did was install the GlassSteagall Act, which separated deposit-taking banks from investment risk-taking banks. So they wanted everybody to feel confident because, after all, what created the crash in 29 was a lot of risk-taking. There's more to it, but that's for another day. And they guaranteed deposits. That's when the FDIC was born, so that people would put their deposit in the bank trusting that they would be able to get it back out again. But I think it's really interesting that openly he was talking about the revaluation of gold to dollars, which enabled them to print so many more. Because after all, they're backed by good assets. Guess what, guys? These are still good assets. This is a market that's based on Wall Street making money. It's a trading market. Everything has been turned into a commodity. Why is that okay with you? And do you realize it? Because most people don't. They just live their lives thinking everything as normal as possible, when in fact, the prices are not based on real supply and demand. We've been talking about that forever in both gold and silver, because a rise in gold price is an indication of a failing currency. Do they want you to know the currency's failing? No, they do not. And oh, by the way, silver, SLV had to change its prospectus because they couldn't get their hands on silver, but we still see spot in the 20s. Okay, so they know how to manipulate a market to make it look anything that they want it to look like. And you and I are the ones that pay the price for it. Or we're smart and we take advantage of it and we accumulate it. That's what smart money's doing. That's what central banks are doing, though they don't care about the price because they can just print at will. If you hold all your wealth in the system, then you're gonna be in deep trouble. If you hold gold, if you hold physical gold and physical silver in your possession, you're gonna be able to weather this storm. This is the foundation of your money. Because after all, gold eases as U.S. jobs data lifts the dollar and yields. And why does it do that? It lifts because it pushes the central bank to raise interest rates. And in theory, and this really is just in theory, that means that the dollar is more attractive. So, hey, because after all, gold doesn't pay you any interest. Gold doesn't have to pay you interest. It's the safest thing that you can do. So my question to you is, with these fiat money products, why would you risk your entire principal for a teeny pickup in yield? Why? This is the time to be protecting your wealth, protecting everything that you've managed to accumulate. Don't be fooled, because the Bank for International Settlements says it best. Unlike currencies and debt and everything that is not physical gold and silver in your possession, it's all a debt instrument. It's all contract based. So, unlike currencies and debt, which are claims on foreign governments or institutions, how are they doing these days, really? Gold kept at home is not subject to political manipulation. And man, oh man, do we have political manipulation all over the place. And let's just take a look at part of that. What now for the Fed? It has fallen behind the curve again. The central bank downshifted rate increases too early and now faces a set of dilemmas and another knock to its credibility. It is all about credibility. Fed now falling behind on its inflation fight for the third time in just 2 years, and what that implies for its already damaged credibility. This is a con game, and all con games require confidence, and all levels of confidence other than the public, which has eroded. but it hasn't disappeared because people don't pay attention. And you're watching this, and you're all probably, or many of you are sitting there going, yeah, I tried to tell my family. I tried to tell my friends. They don't want to hear it. No, but you have to be kind and you have to be patient, because what we're trying to do and what you're trying to do for them is to help them have a paradigm shift where they start to look at things just a little bit differently. Because when you do, it's amazing what you see.